Hello, hello, good afternoon, and welcome to our webinar. Welcome, Lenny Sklawer. How are you today, Lenny?
I'm doing terrific, doing terrific. A nice hot summer day in South Florida.
Oh, nice, nice. Well, that's typical Florida, right? When people
Typical for
ask
this time
me,
of year. Never get used to
exactly,
it. You never get used to it.
exactly, exactly. You're right. So, well, thank you for joining us today, Lenny. Let's give attendees maybe a minute so that they
Sure.
can join. And I'm super excited to share with our audience today your wisdom, as I like to say. We've known each other for years. We'll share more about that in a minute. Yeah, maybe 30 more seconds, and let's get started. Well, those were is very fast 30 seconds. Anyway, okay. So my name is Marco Scanu. I am the founder and orchestra conductor of Vista Business Plans, and I have been an entrepreneur for more than 35 years. And about 20 years ago, I slowly transitioned into business consulting. And out of that business consulting practice, we branched out into immigration business plans. And wow, Lenny, time flies. It's been 17 years since we started doing working with immigration lawyers, but mainly with foreign nationals, mainly entrepreneurs and business owners. And over the years, it's been a great ride, just helping them get their visas approved. But not only that, over the years, we've seen how many of those clients have succeeded here in the United States. Some of them have failed. And over those years, we identified the need for a lot of handholding and education on how to operate businesses in the United States and how to plan your personal finances in the United States. So we're here to do more than just write business plans and help our clients establish their businesses in the US. We're all about helping them succeed long term. And this is why we invited you today, Lenny. And tell us more about you, Lenny.
Absolutely. So I graduated also from the University of Florida many years before you, Marco. I'm a little bit older. Um, Prior to
Mhm.
my practice today, I was actually a business owner where I had a manufacturing company where we provided decorative mirrors and decorative artwork for the
Mhm.
hospitality and hotel industry, where we would work with different types of hotels and provide them those products per se. So I majored in finance with specificity in insurance, and everything that I provide, I have done for myself. As the slide shows, we want to take advantage of the solutions that are out there. Many times I have found that clients are not aware of the various solutions that are available that they can employ. And in so many cases, using the Internal Revenue Tax Code to take advantage of some of these solutions. Um,
Perfect. Interesting. I also majored in finance at UF. So
we may have
we're
had the
both
same.
gators. That's
There may have been the same professors. You never know if we shared some professors. We'll have to make a list one day.
who knows? Who knows? Exactly. We'll make a list one day, and for our audience, so that we've been working. I have personally been working with Lenny over the years. He has been a fantastic advisor, and that's something that I think makes you different. You advise clients. You're not just trying to sell products, right?
Correct. Correct.
Um,
Absolutely.
Having said this, this is our agenda for today. We are going to be talking about tax efficiency, um, protecting businesses, right? We're going to be talking about sickness and illness or disability insurance, and then we're going to open the floor for questions. So, as I said before, over the years we have helped thousands of entrepreneurs establish operations and grow in the United States. Now, years ago, we started seeing something that was concerning. Many clients were really excited to open their businesses and grow their businesses in the United States. But then we started to see how some of those entrepreneurs and business owners didn't do well. And then we started asking questions, why, what's going on? And since I'm a numbers guy, I started asking our clients, tell me about your numbers, tell me about your percentages. What is your profit margin? What is your, for manufacturing businesses, what is your, cost of goods sold? If you're for clients in the restaurant business, and I was in the restaurant business, by the way, for more than 25 years, restaurant clients, we asked them, tell what is your food cost? And it was surprising that many of these clients didn't know their numbers. So to me, it was crazy that someone made an investment in the United States. They have big dreams for them and their families, but they didn't know their numbers. And over the years, we worked with many clients, updated their business plans. And in the process of updating the plans, we had to work with whatever financial statements they would send our way. And there we saw another issue, really bad bookkeeping. I'm talking about books or financial statements where it was clear that whoever was keeping the books didn't know what they were doing or they didn't care. So over the years, we complain a lot about that and advise clients to get a better bookkeeper or accountants. But then 2 years ago, we decided to do something about it. So we launched a separate entity, separate operation called ProfitWise, focused mainly on helping our clients understand the numbers. And the connection with what Lenny's going to talk about today is powerful because an entrepreneur and business owner can only put away as much money as they can as long as the business is profitable, right? And they can invest in different insurance products and to protect their future as long as their business is profitable. So why is it important to have reliable books? Number one, well, it seems kind of obvious, but it's not so obvious to many of the clients that we speak with know exactly how much money you're making. Otherwise, what is the point of owning your own business? The second reason is improving cash flow. Many people look at the top line, the revenue, and they get excited when the revenue is growing. And then my question to them is, okay, tell me about the bottom line. Is your profit growing? But more importantly, your cash flow. Cash is king, and that's the name of the game. The third reason is it allows you to plan and be ready for tax season. But I like the idea of planning because proper tax planning is a much better exercise than just asking once a year your CPA how much do I have to pay, this year in taxes. Now, another important reason when you have a business and you're trying to grow your business, you're always asking, can I expand into a bigger office? Can I hire an assistant? Can I expand my production facility? And so on. The only way to know that, beyond your gut feeling is to actually know your numbers. And there is one additional reason why it's key to have your books reliable and clean. For many business owners, the value of the business, that assets, in many cases, it's the biggest asset that they have, in addition to their house. And over the years, we have worked with many clients who have, decided to sell their businesses, and we have seen one interesting dynamic out there. When you sell your business and your books are clean, buyers are willing to pay more for your business. If your numbers are not updated and your books are not clean, buyers will not trust what they're buying, and you will sell your business for less. Now, I would like for Lenny to share his wisdom now that I've shared the importance of knowing your numbers. When you work with entrepreneurs, Lenny, how important is it for them to know their numbers and to really have the cash that they need to work with you?
Numbers are incredibly important because sometimes entrepreneurs are focusing on the top line, which is their gross income, and they believe that the more revenue they create, the better off they'll be. And many times that doesn't really work out. So it's very important, like you mentioned earlier, the cost of goods and really having a handle on all the moving parts in running a business to make sure that decisions are being made for the benefit of the business in a very concise and efficient fashion. So what I do is I work along with the business owner and executives to educate them on the various different types of solutions that are out there that go over and above what people sometimes simplify as. So, for example, life insurance. Well, everyone knows what life insurance does in the event of someone's passing. And while that may make sense for many situations, life insurance in its own provides a lot of different benefits over and above the death benefit or the face amount. And that's where, utilizing life insurance to create another bucket of assets for the business owner could come in handy in the future if business situation has a downturn, where you've created another type of asset, as I mentioned, that you can access from. There's the tax benefit of being able to create growth and not ever paying taxes. And depending on the state, some states are
Mm-hmm.
very creditor friendly. So, for example, in the state of Florida, any type of cash value inside an insurance contract or an annuity contract is protected from creditors, whereas other states, like California, have limits on that. So many times I've seen clients relocate their residence, totally legal, of course, where they could take advantage of what the state laws are. So Florida, Georgia, Texas are examples of states that are much more friendly from a creditor perspective, whereas California and New Jersey are not, but New York is. So it's on a state by state basis. Besides the opportunities from a life insurance, the long-term care component. If you agree that you hope to live a long life, the probability of becoming frail is pretty great. When that happens, what plan do you have in place? The other day I was reading that if you have caretakers coming to your home in the state of Florida, it's $34 an hour. So if you have someone coming in for 8 hours a day, that's over $250 a day.
Mm-hmm.
So do you want to use the assets that you've created over your lifetime to pay for this, number one, or is there a better way of taking care of that future risk? Traditionally, the traditional option is like buying, auto insurance. You have the coverage, but if you never use it, there is no equity that's built. Just like car insurance or homeowners insurance. What's become more popular are these hybrid options where you pay the premium. If you do ever need the long-term care benefit, you have the coverage. However, if you don't use the long-term care benefit, you can either A, cash out, or it turns into a life insurance policy of equal or greater value than what you put in. So that's become much more vogue and more appealing. Disability income insurance, I'm not talking about short term, I'm talking about long term. So if someone cannot work for more than 3 months because of illness or sickness or a disability, though 90% of disability income claims are for illness and sickness. So you can't work for 2 years, 3 years. The last thing you want to do is utilize assets that you have not paid taxes yet, like a 401k or IRA, and now have to pay tax on that. Plus, a 10% penalty for early withdrawal. That's so a lot of people fail to protect their income source. And then annuities. Annuities are an interesting platform. There are, four different types of annuities, but real quickly, a fixed annuity is basically just like a CD from a bank. You put money into a
Mm-hmm.
CD for 3 years and you get the interest, let's say it's 5%. Even though the money is in there for the 3 years, at the end of every year, you will get a 1099 that you're going to have to pay tax on the interest. A fixed annuity works the same way. Let's say it's 5%, but you do not get a 1099 at the end of every year. So 3 years later, if you decide to get out of the annuity, at that point in time, you pay the tax on the gain. However, if you don't need the money at that point in time, you could roll it over, what we call it a 1035 exchange, into any other type of annuity and continue deferring the taxes into the future. So again, that's one of the items. And obviously, you've got the variable, the index, and the income, where the income is you're basically creating a pension for life. Years ago, when you worked for a company, you were given a pension. It's not common anymore. 401ks. So we've taken, in many cases, qualified money, 401k, IRA, or what have you, and turned them in to some component of a pension plan, which never runs out. And if you're married, your spouse will continue receiving the benefit, or you will continue receiving the benefit at the passing of one of the spouses. Down at the bottom, sort of like a general, list of some of the solutions, what they're used for. Buy self-funding. I think we've got slides on that, Marco, that we could probably move to some of these. So VUL is a variable universal life. So those of you that are earning above $252,000 if you're filing jointly, or 168 if you're filing singly, adjusted gross income, you're not eligible to contribute to a Roth. And the benefit of a Roth is that you pay the tax today and you never have to pay the tax ever again. Well, if you earn above that, what can you do to get into that platform? You could use what's called a variable universal life, which allows you to
Mm-hmm.
invest in the same items that you would invest in a Roth IRA. Um, However, it does have an insurance wrapper, but the insurance cost is a lot less than your marginal tax rate. So a lot of people find this real appealing, and there's also no limits. So even if you could put money in a Roth IRA, you're limited to $7,500 a year or $8,400 if you're over 50. In the VUL scenario, there is no limits to what you could put in. It's still a life insurance policy. However, that cost of the life insurance is a lot less, as I said earlier, than what your marginal tax rate would be. And
Mm-hmm.
unfortunately, if you do pass away prematurely, you do get some value for the life insurance. But these contracts are structured more to be what's called maximum funded. So the lion's share of the premium goes to the investment options. So
Mm-hmm.
that's this scenario. I think there's more slides. Buy-sell agreement. Those of you that have companies that have more than one owner, we're not attorneys, Marco and I, so you should have
Mm-hmm.
attorneys draft buy-sell agreements. Where I come in is that how are you going to fund the buy-sell agreement? In other words, let's say the business is worth $2 million and each of you own 50%. That means that each of you have $1 million stake in equity. If one passes away and has to buy out the individual that passed away, meaning yourself, how is your partner going to raise the capital to pay the $1 million to get to get the full share of the business? Most businesses don't have that type of cash flow. And even if they did, why would you want to take it out when you can, for pennies on the dollar, provide that type of protection by having the right type of insurance solutions?
Mm-hmm.
But beyond that, this avoids any future conflicts with the
Mm-hmm.
family members of the deceased partner. So I find this to be a real simple thing that businesses that have multiple owners should have. That's
Okay. Perfect. Lenny, let me ask you this. You have worked with hundreds, if not thousands, I don't know the exact number, of course, of entrepreneurs and business owners. What do you see when you speak and work with successful entrepreneurs, right? And business owners and entrepreneurs that, protect um, their assets, think about the future, get the right insurance products. What do you see out there? What do they have in common when it comes to them making the decisions and moving forward?
so in most cases, the entrepreneur slash business owner is aware of what I've just discussed.
Okay.
Unfortunately, it's the mañana. I'll get to it tomorrow. I'm too busy running my business. And so
Okay.
consequently, any of these items that have insurance embedded in it requires to go through medical underwriting. So the time to get these solutions is when you're as young as possible, because that's when you're as healthy as possible, and that's when it's
Mm-hmm.
going to cost less. And by the way, these buy-sell agreements could be any type of life insurance. It could be a simple term, or it could be something that's generating cash value into the future. So that's secondary. It's really more about taking entrepreneurs that have multi-owner companies to take action to create a line in the sand to have that type of solution for protecting their families, their employees, and their
Mm-hmm.
business.
Mm-hmm. Okay. So it's going back to the mañana, right? So it's those who are proactive and take action, right? So they are the ones who would you say, have the peace of mind that if anything happens, they're covered?
Correct. And by the way, this applies to any type of entity with more than one principal owner. So it could be a law firm. You can have two attorneys that are the principal rainmakers, okay, for this law firm. And while granted, they could still continue their practice if one passes away. Heck, why give up, that opportunity to actually purchase the interest of one of the partners and be able to continue creating revenue by hiring other attorneys and creating, that income stream that they're used to having. So it doesn't necessarily have to be quote unquote a manufacturing slash operating company. It could be a service related, business.
Interesting, interesting. Good stuff. I wanna quickly share with you. Of course, I'm not an expert in this insurance product. I can see from an entrepreneur's perspective the value of using some of those products, even to attract and retain, for example, key team members. I've read several studies and papers. Maybe you can shed some light on this, but I read that employer sponsored benefits, right,
Absolutely. So
associated,
I believe
can
that
lower turnover rates. Sorry, I'm sorry, there's a little bit of a delay. So go ahead, Lenny.
so basically, if you go to the next slide, that one. So the
Yeah,
executive
exactly.
bonus. So the
Yeah.
executive bonus is literally for key employees that are so valuable to your company that you want to do something to basically create, what we all call golden handcuffs. And so
Hmm.
this type of concept is to retain that valuable individual. And you could literally be discretionary with this type of planning. So, for example, let's say that you have an East Coast sales manager and a West Coast sales
Hmm.
manager. Your East
Okay.
Coast sales manager may be a superstar. You could create the executive bonus platform for them and not for the West Coast
Hmm.
sales manager. So you're able to create this type of solution for your employees, that are key to the success of your business. It could be salespeople, it could be operational people. Heck,
Hmm.
it could be the office manager of your company. They may be the one that keeps everything together. You're not limited as to who you could create this for. The only limits are individuals in your company or in your firm that you find so successful to the benefit of your company that you want to keep them. And by the way, from an exit strategy perspective, if you were ever going to think about exiting your business, having this in
Hmm.
place for the prospective buyer is another level of comfort for that protective buyer, whether it's a private equity or a competitor or someone else getting into the business. So yes, it's and it's a wonderful thing to do. But one item that I did not, that's not in the
Hmm.
slide is I had mentioned key employees. So it's a two-way street here. You want to take care of the employee because you want them to live a long life and work with you. But unfortunately, sometimes people pass away prematurely. That's where you would put in place a key person policy to be able to replace that individual by being able to have the funds to attract someone to replace them, in the company. So it's a
Interesting.
two-way prong here. But that businesses from a protection perspective and continuity perspective really need to have in place.
Perfect. Perfect. That's one of the, in my view, the most strategic and smart things a business owner, entrepreneur can do, especially those who aim to or continue to grow and scale their businesses, and those who are seeking to sell, to exit the business, right? And by the way, we're seeing that, as you know, the statistics show that, if I'm not mistaken, around 11,000 people per day reach a retirement age, right? So we have been seeing a lot of those, owning businesses, wanting to sell, to sell their businesses, to exit, and some of them don't have these products in place. So what does that mean? They can sell their business at a lower price than those who can really put in place all these safeguards in place, or it's basically risk management. That's what
Right.
it is.
That's
Yes.
that's right. It's business risk management that is important, to have in place. And getting back to the disability income, you can also get solutions that will take care of overhead expenses, except for the principal that has the disability income. You can have business disability income. So if a principal
Really?
cannot work, to cover the overhead, excluding the principal's compensation. So your general payroll would be covered, by this in the event that, let's say, the principal cannot work and revenues go down, but you still have that fixed, overhead that you need to take care of. So you can also, add that as another type of solution when you're looking at the disability income component.
Wow. That's very interesting. I didn't even know that product existed. How's that product called?
It's
Is
called
it
business owners disability income.
wow, so interesting.
Yeah,
Wow.
yeah.
See, I'm learning new
There you
things
go.
today. Thank you. Exciting. Yeah. Okay. So I wanted to again go back and talk from the perspective of a business owner who's not only thinking about this in his own company, which is me, but also working with clients, right? I mean, I was making reference to, I was reading an article a few days ago that said that when a company offers employer or company sponsored benefits, insurance benefits, that can translate into lower turnover, right? Rates by roughly 20 to 30%. I don't know if you have different figures or something, but it indicates that, again, it's a great tool to attract and retain the right people. Same with health insurance, life insurance, and life
Correct.
insurance products with cash value. Yeah, again,
Correct.
from a
Any
business
type,
perspective.
right, any type of employee sponsored benefits will lower the turnover by far. Obviously, a lot of businesses believe that it's expensive, especially if you're offering health insurance, which I don't get involved in, but I know enough because I've been exposed to a lot of that. But you have to then look at what the cost is for turnover. So you have
Hmm.
to do the analysis as to determine, is it worth my while as a business owner to provide these benefits, or do I want to have high turnover rates where I have to train new people? So that's a decision that the numbers need to be looked at to determine what makes the most sense, from that perspective.
Hmm. Okay. Okay. Perfect. Thank you again, Lenny. Now, you were talking about disability insurance and income protection. Why don't you walk us through that, please? I find it
Sure.
very interesting and fascinating. Go ahead.
So one of my pet peeves is sometimes the insurance world doesn't necessarily present the solution in the most compelling way. So
Okay.
forever it's been referred to as disability income protection. And I know that I mentioned it earlier, but I'll bring it up again. 90% of claims are not because of disability. It's because of illness, accidents, and sickness. Okay, so I wish that they would come up
Wow.
with another way of positioning this.
Okay.
The statistic is 1 in 4 at some point in time. Again, disabled is what they use, but it could be illness. It could be, God forbid, you got into a car accident. It could be you have cancer and you have to go through chemo for the next year and a half. It could be heart-related issues. It could be an entire host of different things. This is an item that, believe it or not, when people are in medical school, one of the first things that they're spoken to is to get disability income when they become doctors. Because, for example, let's say you're a dentist or you're a surgeon and you go
Hmm.
skiing and you break your hand. You
Hmm.
can't be a surgeon anymore, maybe temporarily or maybe
Hmm.
permanently. So there's a whole host of different scenarios, and there's all different types of solutions. There are solutions that will allow someone's called ONOC, that as long as you cannot do what you were underwritten for, let's say you're a surgeon,
Okay.
you can go out and teach at school and still collect your disability income per se. So they doubled it. Totally legal
Hmm.
because they paid more for that policy because it's called ONOC. There are other policies that say, okay, look, if you can't work doing what you do, but you could work doing something else, well, guess what? You got to work doing something else. And if there's a differential in compensation, we'll make up the difference. So it really depends on what the
Interesting.
client is trying to achieve. But it's really important because without income, everything else falls apart. I mean, when you really think about it, you can have the greatest solutions in place, But if you're not creating the income, you're either going to deplete what you've saved or everything goes away. So this is a pretty simplistic solution to have. Unfortunately, it's not presented to a lot of people.
I hear you. I hear you. And by the way, I was reading this morning. I don't know if this is true that now that we're in the middle of the World Cup, that Messi's legs are insured for what, $900 million. I don't know if
It's
it's true.
crazy.
I'm sure. I mean, I'm sure he has insurance on his legs. Going back to what you were saying, a surgeon that uses their hands to do their work. I mean, it makes a lot of sense that you'd have their hands insured, right? And so
Correct.
on. Yeah.
Correct. So, I mean, look, if you're an attorney and God forbid, you get Parkinson's when you're 45 years old, your mind is going to be good for X amount of years, but you may not be able to use a computer properly. Or, you may be limited in what you could do. So I always ask people, if car insurance was not mandatory by law,
Mhm.
or if you have a mortgage for your home and the mortgage company did not require it, would you still insure? Over 80% say, of course we would. So it's very interesting how we insure items like your car or your house, but you fail to insure you, who's the most important of all. But it's just a mindset that, it's what you're exposed to. But the
Mhm.
reality of it is, if you can't work, everything kind of stops per se.
Wow, that's so interesting. Yeah, I mean, but has that changed over time, over the years? I mean, the percentage of people who
No, it's just
no,
something
no.
that, right. It's just not, you know, it's just not, out there enough, in my opinion. I've seen too many situations where this, has taken place and
Mhm.
families, get into trouble. And by the way, on the opposite side, and the long-term care as well. So
Okay,
statistically, I know that it's a different, that we don't have the slide for that, but statistically, 70% of individuals are going to need long-term care coverage.
70%.
70, because we're living longer,
Wow.
because medical science has improved greatly. When we would present that years ago, I could see people's eyes and they're thinking to themselves, I'm the 30%. I'm not the 70%.
I'm
So
not gonna need that.
we flipped the script. And as I said way at the beginning, I said the questions now is, do you believe you're going to live a long life? Most people are positive. They say yes. When you live this long life, is there a possibility you may become frail? Yes. What's your plan? Is your plan to have your spouse be the caregiver? Your children be the caregiver? What if your child lives in another city? What are you going to do there? Okay. And do you really want your spouse to have that responsibility? And statistically, many times the spouse passes away from the stress, not only the financial stress, but the emotional and physical stress. So that's the
Wow.
other item where people just, that one is becoming a little bit more known, just because if you look at one of the fastest growing industries, it's the assisted living nursing home platform. Major private equity firms have invested in all these type of assisted living memory care facilities where they're getting $8,000 a month, $10,000 a month, $12,000 a month for someone to have this type of care, because the surviving spouse simply just cannot do this. So who's going to fund that? How many people want to take $120,000 a year for 5 years, 6 years, 8 years, and
Mhm.
deplete their life's work? Or can you do this for a heck of a lot less? And if you don't use it, it turns into a benefit to either the
Mhm.
spouse or to other beneficiaries. Why wouldn't you want
Mhm.
to do that? But that's becoming more vogue just because people see the physical structures, that are 4, 5, 6 floors. I've got two in my neighborhood. They're beautiful, but why are they building all these type of, you know, uh, buildings? Because there's an obvious need. Again, most people are going to utilize going to physicians and have medical care. Well, that means that you're probably going to live a longer life. Anyway,
That's eye-opening, Lenny. Thank you.
so
So,
finally, these are for higher net worth individuals. Today, the estate tax exemption is 15 million. So if you have 15 million or less, there is no estate tax. However,
Mm-hmm.
if you have more, then you can do, estate planning by creating irrevocable trusts, what have you. But the reality of it is, if you have those type of assets, they're going to grow in the future.
Mm-hmm.
And consequently, one way of paying some of the future liability is by having life insurance for individuals that understand that they're going to need this type of solution because they may be in real estate and let's say that they're worth $40 million. And let's say that their taxable estate is not 25, the difference, but let's say they changed the law and it's higher, or they've been able to repurpose some assets into some other platform. So let's say that their estate tax has been minimized and now it's $5 million. But
Mm-hmm.
what if their assets are tied in real estate? You have 9 months to pay that estate tax, 270
Okay.
days. What if it's not the right time to sell some of the real estate because the market is down? So it's good to have some instant liquidity to at least pay for some of that
Mm-hmm.
future tax liability. So premium financing is basically individuals that understand they're going to need the liquidity, but they are making so much money with their real estate or their other operating business that let's say that the premium is, use around number 100,000 a year. Lenny, I know I need it, but I make 25% of my money every year. So I want to keep it in my business. So what the
Mm-hmm.
premium financing is saying, okay, great. You know you need it. The best time to get it is when you're younger, when you're healthier. How about if, as long as you qualify based on your net worth and your liquidity, what if we finance the premium? What if we go
Mm-hmm.
to a bank that specializes in premium financing and we could borrow the premium? Let's say it's 5%. So instead of paying $100,000 in the premium, you're paying the interest of $5,000 for the first year. You
Mm-hmm.
cannot accrue the interest, so you have to pay the interest. The next year, it's $10,000. The next year, it's 15. It keeps on, but you're paying the interest every year, so you're not, accruing it, and you're keeping the $100,000 in your business where you're earning 25, 30% per year, like you're saying. 10 years
Mm-hmm.
later, in an
Interesting.
example, okay, you've only paid the premium for 10 years because that's what we design, a 10 pay. Well, now you don't have any interest that you owe because you've paid the interest every year. Well, now why don't you take the profit from keeping the $100,000 in your business for those 10 years and retire the loan? Now you've got a fully paid up insurance contract. Again, this is really for the high net worth individual, but it's a concept that sometimes brings individuals to get that coverage because, again, you're never going to be as young as you are today and you're never going to be as healthy as you are today. So that's the premium financing. Now,
Okay.
years ago, it was $5 million, the exemption. And before that, it was 600,000. So can it change? Of course it can. Is it always going to be at 15 million? It was going to roll back a year and a half ago, back to 5 million. But they kept it
Mm-hmm.
on the books because the new administration came in. But we are at an all-time high with the federal debt.
Mm-hmm.
Could it go up? Maybe. Could it go down? Maybe. I'm not a fortune teller, but if you look at common sense, this is something that should be planned for.
Okay. Interesting. I didn't know about the existence of premium financing. So this has been a master class on insurance products. Very interesting. Okay, good. Let's see. I think that we are going to be opening the floor for questions. I do have a question for you, Lenny, before we let the audience ask questions. With all these different products, it's a lot of products out there. How do you work? I mean, when you have someone interested in learning more about the different solutions they have, and people have different needs, how do you work with them? How do you know what's a good fit for them?
So, in order to work with clients, I need to sort of be like a medical doctor. I'm not saying that I'm a doctor, but the same way that when you go see a doctor, there's an intake form with information about the client's situation from a financial perspective and their goals and objectives and what have you.
Hmm.
Once I have that, then I could start putting together plans that may make sense based on what they're trying to achieve. So the last thing we want to do is, if there is some planning that's taken place, we don't want to reinvent the wheel and we don't want to replicate. But many times I find gaps, I find opportunities to enhance what they have in place. I represent 28 companies, which allows
28.
me to really go out to the market to get the right solution. So insurance solutions contracts are not like if you're purchasing a home where you could change what's in that purchase agreement or that selling agreement by using an attorney or by changing one of the conditions. Insurance contracts are contracts of adhesion. You cannot make any changes. So I
Mm,
may look at company A and company B, and company A has a clause which may be more favorable based on the client's goals and objectives. We go with company A. That's why I
mhm.
have to represent the 28 companies because I really want to give clients the most appropriate solution based on their goals and objectives.
Thank you. Thank
You're
you. Thank you,
welcome.
Lenny, for. And we have a couple of questions, right? I think this is for you, or these are actually for you, the two questions. How does medical underwriting affect the cost and type of coverage available for anyone out there?
Okay. So medical underwriting is pretty important. So, for example, every company has different types of underwriting. There are certain conditions that you get declined, but there are
Hmm.
certain conditions where there's all different types of underwriting levels. So, for example, I actually have a client that I'm working with right now that received a non-smoker rating, but table, which means that they have some issues. So
Hmm.
they're in their mid 60s. They're $7,600 a year for a 15-year term.
Hmm.
Her partner, who got the best rating, select preferred, the same age, 2098. So a
Hmm.
differential of $5,600 a year based on the medical underwriting per se. So it's huge.
Hmm.
It's huge. And sometimes clients get declined. They have certain conditions that are uninsurable. Sometimes we go out to multiple carriers. So I've had situations where it's a challenging type of scenario, and one company may give us non-smoker rating, and another company may decline. So underwriting, certain levels of underwriting are givens, but certain levels of underwriting are subjective. So sometimes,
Okay.
you get an underwriter that maybe, had a bad night the night before. Argentina loses, so that they're an Argentina fan
Mm.
and they're not happy. You may not get such a good rating. So it's a combination.
So it's
It's a
always
combination.
the human factor, right?
Exactly. Exactly.
Behind that. Now, let me ask you this: what are you spoke about certain conditions that can make a person uninsurable? What are those conditions?
So it could be schizophrenia.
Okay,
That
mental
can be a
conditions.
condition where
Yeah.
someone is uninsurable. It could also be certain types of cancer that
Certain types.
certain
Okay.
types. So,
Mhm.
so for example, if a woman had breast cancer and it's more than 5 years and they're not taking any of the drugs that would make her uninsurable, they're definitely insurable. So it's on a
Mhm.
case by case basis, and it really depends on whatever the issue is. For example, diabetic taking insulin, some carriers will insure that. HIV positive now, some carriers will insure that. So not all carriers. So that's why you have to. That's why I have so many carriers. I have to go out to the market to make sure that whatever the situation is, we take care of. But sometimes,
Okay.
unfortunately, people are uninsurable. I mean, it is what it is. So, for example, diabetic with insulin, from a long-term care perspective, is probably a decline, whereas from a life
Mm.
insurance is not. So life insurance is based on mortality. Long-term care is based on morbidity. Different
Okay.
underwriting, different underwriting requirements, different departments in many cases with the insurance company because you're looking at different variables for each.
Okay. Okay. And have you seen any, let's say, recent changes or trends in underwriting? Are they getting more stringent on certain cases, or?
No, no, it's actually because we're living longer. Some carriers have actually become more aggressive with the life insurance premium. So that's been a good thing. The other part is because of AI and the digitization of records, many carriers are now requiring labs for coverage in life insurance because they have information readily available that they can already use AI, because it costs
Mm.
insurance companies money to implement labs because they're using
Okay.
third party companies. So wherever
Mhm.
they can not use labs for normal coverage. Obviously, if someone is looking for $5 million, they're going to get labs no matter what. But for smaller level types of coverage, in many cases, there are no labs required. So that's been a positive per se. And that
Okay.
actually was a byproduct of COVID, because insurance
Mhm.
companies obviously were not going out and providing, asking people to get labs by having a stranger come to their home. So they were able to really, overcome that. And then it's kind of stuck. And since then, we've had so much more AI and so much more digitization of records. So those have been two positives that I find. Makes it easier.
Okay. Wow. Interesting. Thank you. Thank you, Lenny. And the second question is actually for me, which is at what point should a business owner stop doing their own bookkeeping and hire a professional? Well, this takes me to a very important conversation I have with many clients, which is we all have 24 hours in our day, right? Even the most successful person, most successful entrepreneur, we all have 24 hours in our days. So the real question is, what is the best use of your time? And for a business owner, entrepreneur wanting to grow the business and really, you know, scale the business, have more revenues and more profits, the best use of the time is thinking about the future, thinking about plans to grow, anticipating potential issues in the marketplace, competition, and so on. What I found is when someone is when a business owner is using their own time to do their own books, they're really wasting their time. Because they're not really thinking about the big picture and thinking about the future and thinking about the profits and so on. And the second thing is bookkeeping. It's a bookkeeping done right is a different ballgame. Meaning, it's not only about how do you categorize transactions. It has wider implications, right? On the books, on taxes, and so on. So what I've seen over the years is that successful entrepreneurs, they surrounded themselves with the best professionals they can hire and pay, including bookkeepers, accountants, insurance professionals like Lenny, and so on. So I think that one of the best decisions that someone can make is outsource their bookkeeping and financial advisory. And again, going back to what I said at the beginning, the reason why we launched ProfitWise was after seeing the hundreds and hundreds of clients not succeeding or simply not understanding their numbers. So what makes us different at ProfitWise is that we actually take the time to meet with our clients at least quarterly to make sure that they understand their numbers, they understand their percentages, and they're making an effective and efficient, they're implementing an effective and efficient tax strategy. At the end of the day, it's not how much, it's not about how much your top line is against revenues. It's about the cash left at the end of the year, and then the cash can allow you to grow your business, but especially work with a professional like Lenny Sklawer, who will always guide you and be a consultant, letting you know what the best insurance products uh, out there can be a good fit for you. So we have 1 minute till 1 o'clock. So I want to thank you, Lenny, again for your time today and for sharing your wisdom and sharing your advice and
Thank you,
educating
Marco.
us.
Appreciate
Thank
it.
you.
Appreciate it.
Well,
Thank you.
well, thank you. And we want to wish you all a great and wonderful rest of the day. You have here the QR codes for if you have questions, you want to reach out to Lenny or to us. We're here to help and to help you succeed. Have a wonderful day and a wonderful weekend. Bye-bye.
Great. Thank
Thank
you.
you.
Thank you. Bye bye.
Thank